Hi, I'm Kevin Ramirez, NMLS instructor with AAA Mortgage Training, and this is part 5 of my teaser series to give you a glimpse into the great Kevin Ramirez experience of getting prepared for the NMLS exam. I offer the official NMLS 20-hour pre-licensing course, which is required to become a licensed loan officer. But on top of that, I get you strongly prepared to be a loan officer beyond the test, and of course, get you well positioned than most to actually pass the NMLS test rather than some of those self-paced courses you're seeing out there. All right, let me share my screen. We'll get started with part 5 of this teaser series. So today we're going to talk about federal laws. This is the part that some people don't get excited about. It is a little challenging, but I dare say it's a little easier because it is a little straightforward memorization than some other of the concepts on the test. So let's take a look here. What you do need to know is, from what I understand, the test is not going to ask you about acronyms. So don't worry about memorizing what these acronyms stand for, although you will get familiar with them as I use them common in my class. So they'll probably spell it out for you. However, what you do need to know is there is a corresponding regulation letter that goes with many of the laws. So it may not be a question that they're going to ask you, what is the regulation letter for this law? That may not be the way it is. Instead, they may just expect you to know that certain federal laws are also known as certain regulation letters as well. So you need to be able to associate those. Again, that's not even the question. It's just part of the question, assuming you know these things. So for instance, you see here, Equal Credit Opportunity Act, ECOA, regulation letter B. Okay, so I'm going to try to give you some little mnemonics here to help your brain, hopefully trigger for your mind to help you memorize these. There's a few of them out there I've seen in the industry. They're all pretty great. Just I'll give you some of the Kevin Ramirez versions. Okay, so they may not ask you this, but Secure and Fair Enforcement Act, that's SAFE. Many times this is called the SAFE class or the SAFE test. You've heard that before. Well, I always say regulation G and H, you feel safe when you're in a good home. I think that's kind of nice, right? We all care about our young children in this industry and our country. So there you go. You feel safe when you're in a good home. Equal Credit Opportunity Act. Now, I'm going to dive into all these laws in my class, of course, but this is just a high level here to help you as you're getting prepared, memorizing these things for the test. Is Regulation B, a common one is be equal. Sounds great. Be equal, be kind, right? Be good to everyone there. The Home Mortgage Disclosure Act, HMDA, is Regulation C. I've heard many different versions of this one. One of my favorites is HMDA Civic. A little play on words, HMDA Civic. So some people do that. Some people even done fun things, put the C in front, say CHUMDA. Don't know. Whatever works for your brain. So get creative there. So people even said for B over here for ECOA, they say barbacoa. Sounds delicious. Again, whatever works for you. But I like the HMDA Civic one here. The Mortgage Action Practices for Advertising, MAPA, Regulation N. So you could say, some people say MAPA reminds you of a map, right? And what's always on the top there? North, always north in the map is kind of the guiding point. Or some people just say Napa, for my wine lovers out there in Napa Valley. So you just say Napa, Mortgage Action Practices for Advertising, Regulation N. There's the Mortgage Assistance Relief Services, MARS. So there you go, MARS. O for outer space, or you might even say O is even the shape of a planet, right? So Mars, Mortgage Assistance Relief Services. The Graham-Leach-Bliley Act, okay, GLBA. This is Regulation P. Now, I like to say we cannot leak any private information. We cannot leak any private information. It's our job to uphold that. Again, I go into each federal law in the class. The Fair Credit Reporting Act, FCRA, they might call it. Regulation V, people just say, be very fair, right? Be very fair, or not as, or doesn't roll off the tongue the same way. You need a valid reason to run credit. You need a valid reason to run credit. A little longer there. Now, the Real Estate Settlement Procedures Act, RESPA, Regulation X. I've heard all kinds of things here. RESPA, you think of like respiratory system with x-rays, right? I've heard people say REXPA, there's a little X in there. Or give me a little respects, right? You know, a little X at the end there, respects. So again, whatever works for your brain. I love the Truth in Lending, TILA, they know it. I didn't make this up, but somewhere along the lines, everyone started using Tilla Godzilla. It's just fun to say, I think, but it helps remember it. I also call it the Truth in Lending Act. So I like to say, tells the truth. right? If you picture a funny movie there. So whatever works for you to memorize these regulation letters with the federal laws is great because, by the way, you do get a little scratch paper for the test with a regular calculator and a pen and pad. So as you're taking the test, you start question number one. It's perfectly fine. Came from your brain. If you want to write this down to give you a little reference point as you're taking the test, as long as, of course, you have started the test. So that's one way to memorize some of the regulation letters. Let's take a look at this first federal law. Don't think we'll finish it on this teaser, but let's take a look here. So the Real Estate Settlement Procedures Act. I like to start with this act first because it's a pretty important, great starting point. Regulation X, like we said, RESPA, X-rays. Well, it was enacted in 1974, okay, and it is governed by the Consumer Financial Protection Bureau, the CFPB. So you may be asked in the test, like, who governs this agency and so forth? Who enforces this? Well, created from the Dodd-Frank Act, the Consumer Financial Protection Bureau is very common, one of the agencies that enforces the federal laws, such as RESPA. Now, what is RESPA all about? Well, it's to help consumers shop for settlement services, the closing cost, and to eliminate the unnecessary increases in cost of certain settlement services due to kickbacks and referral fees. You would write kickbacks in there. So this is, again, one of the angles of what RESPA is all about, helping consumers shop around and not having any kind of alliances that would hurt a customer with increases in cost or behind the scenes kickback fees that the customer's not aware of and maybe not getting the best, most competitive offer. So RESPA requires lenders to provide timely and accurate disclosures to customers about the settlement costs so they're aware and can shop for the best loan. So think about our poor customers. You're going to study your butts off taking my class, right? Learning as much as you can with mortgage just to pass the test. After that, you're going to get more training if you go to a great lender that offers a great training program, and they'll go ahead and teach even more how to be a loan officer, right? How to structure loans and how to, work with customer service, all that great stuff. But for the poor consumers, they don't do this that often. They're talking to lenders for the biggest transaction of their life. They're nervous. They're scared. They've heard the horror stories of mortgage back in the day, or as long as I've been in the industry, and they're a little nervous. They're a little nervous. So this is a great way to get timely and accurate disclosures upfront from different lenders that they're working with to see, all right, I can make an educated, informed decision who is the best to proceed with. So I'm trying to give you the why behind this federal laws. Again, this is what I try to do for you in my class. We're not just memorizing things on paper. I'm going to give you the whole story of why these things are so you understand the point of it. Okay? Applies to federally related mortgage loans secured by first and subordinate liens on residential real properties for 1 to 4 family units is what we're referring to there. Okay, so 1 to 4 family units. We're talking about, of course, the 1 unit all the way up into a duplex, triplex, and 4 unit there. Notice not a 5 unit. 5 units and above, that is not residential. That's a whole different commercial lending license. And this, of course, RESPA applying to residential home loans, as you, as a mortgage loan originator, will be applying for a residential state home license, right? So RESPA prohibits documentation prep fees of any kind, also known as doc prep fees. Okay, so what this is saying is, oh, you're going to see in a moment or in my class that there's all these disclosures we have to send to customers. The federal laws make us send it if certain requirements are met. Well, we can't say, well, man, this sure costs a lot of money to send print this and print that and post it and mail it and everything, if not even electronic, costs money. Well, we cannot pass that on to the customer. RESPA prohibits that, no documentation prep fees. That's what we're talking about. RESPA also requires document retention of 3 years from the last action taken on the loan. So in my class, you learned that sometimes we do the loans, a lot of lenders will then sell the loan off to the secondary market. Well, from the moment we sold that loan, right, that is our last action taken, we have to keep records from 3 years from that point. If you get that whole. And of course, why document retention? Because when the CFPB comes to town or any state regulator, they want to do some audits. They want to see, are we following the rules and doing things the right way, which is so important because there have been some bad actors in the mortgage industry, as I mentioned earlier. Now, we're learning about RESPA. So I know all of a sudden I throw in TILA here. So thinking, why, Kevin, why are you talking about TILA when we're talking about RESPA? Well, we're going to learn something in my class that TILA and RESPA are 2 separate federal laws, but there has been some overlap between the kind of the areas that they touch on. So something called TRID. You might have heard of TRID, the TILA RESPA Integrated Disclosures, more initiative. I talk about in the class, but anyways, what we're talking about here is they prohibit any advance fees. You would write in advance fees to be charged prior to the borrower receiving something called the loan estimate, which we cover in detail in the class, and expressing intent to proceed with the initial loan estimate. So not only do we give the customer a loan estimate, which is exactly what it sounds like, an estimate of all the closing costs, so forth for the loan, the terms of the loan, but they received it in their hands physically or electronically, and then they express to us, the lender, their intention to proceed with a loan. I got your loan estimate. I like what it says. Looks good to me. What's the next steps? I would like to proceed. Awesome. At that point, now we can say, okay, well, the next step, Mr. Customer, is I'm going to need a credit card usually, right, to order the appraisal. So that's very common. That's what we do in sales here, right? After the customer receives the loan estimate and expresses intent to proceed, we can then ask for, right, not before this, the credit card to then order the appraisal. Okay, so this is important, right? No advance fees until then. Now, there is one exception. The one exception to this is the credit report fee. And you'll see some lenders out there have chosen to do so. That is the one and only charge, advance fee that we can charge upfront to the customer before they've received the loan estimate and express intention to proceed. Is the credit report fee is what we can charge upfront. Advanced fee, of course, meaning, if I didn't clarify, that charged at the beginning of the loan process rather than at the end of the loan process when the customer is signing documents at the closing table, so to speak, and the loan funds and all the closing costs are charged, right? So that's later on. This is, of course, paid before that advance fee. Now, as it says here, the customer expresses it. I will tell you, just to clarify, that's the way the law is written. They express intent to proceed. Well, how do you measure that? How do you prove that in court if you ever get audited? Well, that's why many lenders have the customer sign an actual document called the intent to proceed. So they have the loan estimate and they have a separate document called the intent to proceed. They sign the intent to proceed, give that back to us. We say, great, love to do business with you. Let's get started. I'm going to need a credit card, sir, to go ahead and order that appraisal. So little upfront fees there. Let's see, I'll give you a little bit more here. Now, what does RESPA cover? RESPA covers purchase transactions, refinances, reverse mortgages, assumed loans, if certain loans can be assumed by a new borrower in the future, property improvement loans, equity lines of credit, such as HELOCs, home equity lines of credit. What's not covered by RESPA? Well, cash sale, right? A cash sale, there would not be a lender involved, even though some of the forms might be used. Business, commercial loans, temporary construction loans, vacant or unapproved property, unless it's been moved in within a couple of years. So, got it right there, what RESPA applies to, what RESPA does not apply to. Now, here's a great thing for you, and maybe we'll stop here after this, is what's very important to know for all these disclosures, RESPA defines what is an application. Now, some of you might think, well, Kevin, I thought an application is that uniform residential loan application, the URLA, the actual thing the borrower fills out to apply for a loan. You are correct, right? But here's a second definition. RESPA defines an application as when you, the MLO, the lender, obtains 6 specific criteria from the customer. Which 6? These 6. Now, we have this little acronym here. See it? Aliens. This is a way for you to remember these 6 criteria. No, the test is not going to ask you, what is aliens? What does aliens stand for? This is something some of us have made up to help you memorize the 6 criteria. So you can see the address of the subject property we're lending on, if we get that, the loan amount for the new loan, the income of the borrower or borrowers, the estimated value of the subject property that we're lending on. Notice the E is not employment. Sometimes people think E is employment. No, it is estimated value. The name of the borrower, borrowers, and their social security number. These 6 criteria, when we obtain this, it's very important to know that RESPA calls this the loan application date. Now, why is that so important? Because when we get all 6 of these criteria, that triggers the requirement for loan disclosures to be sent to the customer within 3 business days of the application date. Within 3 business days of the application date, right? So that is very important. And which disclosures? Well, one of them is the loan estimate, as you might have guessed, but there are some other disclosures we'll be talking about. But it is very important to know this because a lot of the rules are going to talk about the federal laws, disclosures must be sent from what time? Well, a lot of it is going to be within 3 business days of the application date. And what is a business day? Well, for that official answer, you have to take my class. There's actually more than one definition of a business day, and I do cover both of them in my class. But for now, I'm Kevin Ramirez with AAA Mortgage Training. Check the chat for how to register for my class. I look forward to helping you guys out in the future. Like I said, if you really want to learn, become a strong loan officer in the industry, and you really want to make sure you pass the test in your first attempt, I'm just going to say I'm probably your best bet on that. As many of my hundreds, if not thousands, of previous customers have told me so. So take care. I'll see you soon.